What's going on, everybody? Michael Silva here. Hopes for the Fed pivot, squeeze the stock market once again. Got to wear sunglasses looking at this screen. Holy moly. You're watching the Stock Market Brief Show. My name is, once again, Michael Silva. If you haven't done so already, make sure to hit the thumbs up and subscribe to the channel if you like technical analysis and intermarket analysis. We're hopping right into today's show. As you notice, reported by Reuters, hopes of an elusive Fed pivot drive the market higher. It has been higher, but what I find interesting here is if we look at the Fed watch tool, and we look at November 2nd, that's the next meeting date. Look at just I guess if you haven't seen this, where we're comparing what it used to look like, right? So the dark shaded area is the most recent, and then as you scale back, that it gets further out. So 1 month it was here, 1 week ago, and then 1 day ago, and then today. And what I'm looking at here is the target rate down here at the bottom. And the current target rate is at 300, right? So 300 is the current target rate, and basically it's saying that the likelihood of doing from going from 300 to 350, that actually has been decreasing, right? Whereas the likelihood of doing a 75 basis point hike, right? 300 to 375. I'm just going to draw out 75 right here. Okay. Boom. That has actually been increasing. Oh no. Increasing. Now, also to note, if you look at the December 14th, we'll click over to there. It's also been decreasing from this standpoint from 400 to 425. And this is just current, right? So you can see that the decrease there today and then the increase over here. So talking about the Fed pivot, the Fed futures or the Fed watch tool here is still saying, hey, there's a strong likelihood that we end up at 425 to 450 by the end of the year. So what does that look like? Well, we're at 300 right now, and if we go to 425, that gives us 125 basis points more of rate hikes. Okay, so how would you do that in the next two meetings? It would be most likely a 75 basis point hike, so we'd get a 75 in November and then a 50 right in December. So we'll see if that's going to continue or if this is going to change. But as far as the Fed pivot, that's just news. That's just narrative. We know what's been going on. Things have been getting overextended to the downside, and now we're getting some short coverings. And I mean that not just like theoretically, like we are getting some massive short squeezes. So if I go to Finviz, right, and we look at any market cap company, right, from small cap 300 million and up, and I put out a float short that they have of over 15%. Okay, so it pulls up a total of 178 different companies. Okay, and I'm showing you, I double clicked the change, so the percent change. I want to see what performed the worst. And what do you notice here? If you don't know right out of the gate, I'll tell you, there was only 4 stocks out of 178 that were in the red today with these filters on. 4, and these weren't even down that much. Okay, and then if you just go right to here, this is on page 1 of 9 doing this, but I'll flip it to look at the top performers. Just on the very last page, we're up 2% on some of these names. So if I go to the next page, or if I change to highest performing to lowest performing as time progresses there, just take a look at some of these names. They were up 17, 16, all the way down 10% on the first page. Things like Affirm, AMC, right? Rite Aid, Stitch Fix, Mara, BFLY, MicroStrategy, come on now. It was up 10% today, right? So this is clearly a squeeze, and this because of the correlation in the markets. 11 sectors, all in the green once again. Okay, these we're talking, if you follow me on the Patreon or you look at the zones, I post them here every once in a while, we were getting minimized moves, less and less downside available, and when that happens, our upside starts to expand, right? The possibility for more upside, and we're getting those bounces, right? We talked about the bullish divergences that was forming on the BP charts. This is for technology. It was getting thrashed down here to a very low reading, right? This is why I say you don't short here, right? You wait for it to come up, and it does look like it can still potentially head up. That's always a possibility. Consumer discretionary also, right? It was getting crushed down here. We said it's going to go back up eventually. Well, now it's going back up. It doesn't take a long time to change. It was 2 days. We talked about the back month versus front month volatility, right? When this line comes down to here, and then when volatility is upside here, it could mark potentially short-term bottoms, and bada bing, bada boom. We talked about the also this smart money versus dumb money ratio, where we look at HYG on the hourly time frame right up here. That's smart money, and then dumb money is the SPY. Put in a lower low, this put in a higher low, and guess what? It's playing out to the upside. So we've got to wait to see, right? We'll talk about the other charts, but if there's more upside, we want to see if there's a negative divergence, another one of these bad boys that form. So we'll continue to watch that. Another big thing helping the rally out is the dollar. The dollar's coming off, but pay attention to where we are with the dollar, right? Higher highs, higher lows. It's still in an uptrend, people, right? So it's coming off, and the market is liking that. But it's not just this that's liking it. It's also gold, right? So, do I have my chart of gold? Yeah, gold, right? So gold has been rallying up higher, and that's also, you dollar down, and the 10-year yield comes down a little bit too. So yields come down, and dollar comes down. That's just a massive move there for gold. Now, the dollar has been pulling back, right? This is called a pullback and an uptrend. As it stands right now, we're right next to that weekly expected move. I actually added some exposure to dollars right here just to take a little stab at it. It's low beta, it's nothing big, but I want a little bit of exposure to dollars if we do get some sort of a bounce. Let's continue on, and you don't need to just buy dollars. You can also short things, right? You can take, you can go long dollars and short, FXE or something like that. Like, there's a bunch of different ways that you can go about your portfolio or how you structure it. Me personally, I just added a little bit of dollars. Nothing too crazy there. Yeah, 10-year yield backed off slightly today. Another thing that I want to call out is a couple BP charts, right? They're starting to work off of those overextended areas. So yeah, gold was up, the miners, right? The BP chart and the miners had this positive divergence it's building, and we saw a massive move not only in gold but also in silver. And as we know and we talk about frequently, the GDX tracks silver almost perfectly. So up here, right? Up here we have GDX, and if I overlay a chart of silver, it does darn near the same thing at the same exact time. If we take a look at bonds, right? Bonds, the yields, right, came off a little bit. And also TLT was down slightly on the day here too as well. Are we starting to try to catch a bottom? Just remember, it's still in a downtrend, right, people? So if you're trying to catch a bottom, you might get sucked back down. So if you are trying to catch a bottom, just make sure that you're really paying very close attention to risk. If we take a look at the 15-minute time frame, we got that squeeze. Now, I want to be very clear here. This right here, I like intraday trading with higher volatility, but this, I took no trades. I just positioned myself differently today. That's all I did today. Why? Because there was no really opportunities. We gapped, we ramped, and we camped. Right? So we gapped, ramped, camped. That's all we did. And we just had minimal price action with a lot of chop, closing at about the high of the day, as you can see there. And when we close at the high of the day, that even leads me more to believe that this is definitely a short squeeze. We have a subtle negative divergence that's building here. Does look like we have the possibility to start shooting out a little bit further. So be open for that. But yeah, this type of a day right here, this is kind of like a non-event, right? It's a nice big update. It was up 4% in just IWM, right? So IWM more specifically carries a lot of high short interest stocks, and yeah, it was squeezed to high heavens. Now we are above the 5-day moving average, and it is starting to incline, so that's positive. We're outside of the weekly expected move. We're getting out of that chop box. And we're not too far off of this volume shelf profile where we had this prior price action that we discussed. So up into this range right here, right? I'll be looking for short opportunities, but as it stands right now, you just got to be very cautious out in this area. I'll get more specifically into a couple other trade idea setups that I'm thinking about. If we take a look at the Qs, very same situation. It gapped and it basically ramped and camped, right? So we gapped up, and if you don't chase this right here at the gate, you want to see how it kind of works itself out, and it basically just ramped and camped, and then we had a little bit of a sell-off, and then just a flush move higher. So very hard day to trade this, and if you just look back, to the left of the chart, we're still within this just chop box as it stands right now, and we're above the weekly expected move early on in the week. It's only Tuesday, right? We have a lot of time left in this week. I'm considering applying some short position to see if we can come back, just tag the upper weekly expected move, just to have a little exposure. If we do drop, we do have some important data coming out tomorrow, so I'll be open to that. I'll see how the day opens up. I'm not going to fully commit to that as of right now, but we are above an inclining 5-day moving average. It's more neutral than anything, so a pullback into this area, the 5-day moving average comes up. Pay very close attention to this level right here, that 277.50 to 278 area, and that could potentially act as a level of support where we just doodle around there, or potentially bounce from that level there in the Qs. If we take a look at the SPY, same thing, closed at the high of the day. We gapped, we ramped, and then we camped throughout the rest of the day, making it very hard to trade intraday, right? It was just a hard day to trade. There was no trend. It was just a range day for the most part, right? And it started off with this monster gap up. So the big move happened in the futures market. We do have that subtle negative divergence. We are above the 5-day moving average. So now we just got to wait for price to come back to us, or wait for the 5-day moving average to come back to price. And then we could try to start really structuring some long trades. But right here in this chop, just got to be very tactical, very tactical. Now, this is all on the back of a volatility index, the VIX, closing at 2907. So it is below 30 now, but it's still not too far off. So volatility still remains very high. So we got to be careful. It's not just that. We also have VXN. VXN is at 34.42, so that's in the 30s. Russell volatility is 34.76%. So we're talking a lot of volatility here, okay? Got to be careful. So if you are getting this FOMO and you're like, it's going to rally, it's going to keep going, there'll be opportunities to enter, okay? Just calm down. You got to relax in these times. Now, I want to show you this chart that I posted on Twitter. This is kind of getting me interested in finding some energy short positions, potentially just trading XLE from the short side and building into exposure, something that I shared with my Patreon group earlier today. But I want to call out here OVX. This is, you know, basically the VIX, but for oil, right? So it's the volatility index for crude oil. And I want to call out that if I just show you USO, which is, you know, oil. Oh, whoa, what was that? Oh my gosh, I'm all over the place. If you just look down here, this is USO, and then over here is OVX, so we have oil down here. Typically, most of the time, if we apply a correlation, I'm just looking at a short time correlation, a 15-day correlation between the two. Typically, it's negative. So right now, it's at negative 61. So that means when oil volatility goes up, chances are oil goes down. When oil goes down, oil volatility goes up. But I'm just calling out now that we're starting to see in the very short term a positive correlation. So oil volatility is heading up. And you can see it's almost like breaking out, right? It's above 55. It's looking like it's spiking. It doesn't mean that these can't go up together. That's not what I'm saying. It definitely can. But if you just look at history, there's typically a negative correlation. And you have oil that's been on this monster move these last few days. But it's not just oil that's been on this monster move, right? Energy stocks have been the top performing sector these last couple of days, bringing up 4.3% just today. So, I think that there's some opportunity to fade this type of move, either with some, bearish spreads and or potentially just slowly building into a short position. Maybe not USO, maybe it is XLE, maybe it's individual energy names. I'm just throwing out the idea to potentially start getting your, thinking about that. So if you see a good risk to reward setup where you have minimal risk to the, go against you, but yet there's a good possibility for downside, then there you go, right? So continue to look out for that kind of stuff. Another thing I want to call out from the energy sector is the BP chart. It was very overextended to the downside. So this tells me here, yeah, we have increased volatility, but we're really just kind of squeezing higher in these energy names because we were so overextended to the downside. We had literally a 5% reading here on the bullish percent index. So yeah, we're seeing a bounce. We're seeing some relief. So I would like to see this come up a little bit higher and then start looking for some opportunities at that point. But what if it doesn't? So that means I would have to slowly build into those shorts, and that's where I'm kind of getting at. Also, to note that I find interesting is the yield curve, right? So we're talking about a Fed pivot, but I mean, look at the yield curve. It's at minus 48 basis points. The 10-year and 3-month, the Fed staple is at 17 basis points. It looked like it was coming back up, right back down into this little flat as a pancake range. And this is sitting right at about its lowest it's been all year long. So when I look at this, I'm also thinking, okay, well, this isn't good for financials having a deeply inverted yield curve. So financials, they have been catching a bid as well. What do I mean? Well, if we just take a look at financials, that was the second best performing sector today. It was up 3.72%. That is a huge, huge move in financials. So starting to look and position yourself for individual financial stocks could be a good opportunity from the short side, okay? And if we look at the BP chart here, this one still shows that we're overextended. We're overextended with just above a 5% reading. So there's possibility that the squeeze continues on, but we got to be ready if, the harder the move, you're going to have to take some sort of action from a good risk to reward standpoint. So that is kind of what I'm paying attention to. Let's look at a couple other BP charts. BP SPX. Right? It's now getting out of that oversold condition, pointing straight up, right? It was deeply, deeply overextended, and now we're starting to see some relief, and just took 2 days to do so, right? So that's why I always say you don't want to short down into these areas, because you can get your face ripped off. BPNDX also back above that 50 RSI, working off those overextended areas. BPC-OMPQ, this is a NASDAQ composite, working itself off of those overextended territories. Dow Jones Industrial Average still shows that it's pretty darn beat up. Okay, so this could potentially have room. Now, mind you that there's only 30 stocks in the Dow Jones 30, so this can, it looks more choppier than something like, the BP composite, okay? If we take a look at, we'll continue on, the old full indicator is still showing that there is bearish momentum to the downside, so yeah, we're squeezing higher here, but what you really want to see is this green line over here cross above the blue line, and that right there can activate a buy signal, or potentially change in trend, like we saw right here when it started taking place. It was a little choppy, but it was right through here, and then when we started seeing it cross down, right, it's a lagging indicator crossing down, that gave us some indication that the trend could change, and boom, it went more to the downside. Okay, so we'll continue to watch that. This one's not fully updated today, so I'll look to see what it is later tonight and maybe bring it back up tomorrow. Spring bottom Fisher also still pointing straight down at this current point in time. So we'll wait to see if this starts curling over to potentially give us insight that, hey, this could be, a short-term bottom, the bottom, doesn't really matter, but there could be potentially more movement to the upside. And the last thing that I'm paying attention to here is the NYSE summation index, right? We see a little tiny curl taking place right here as we're getting a crazy reading at minus 1,000. All right, but the parabolic SAR still remains above. So when we start seeing it click below it, then, I'll start considering adding a little bit more long exposure just to have in my back pocket for if this is actually some sort of a long-term bottom. Maybe it's a bottom for a month. Maybe it's a bottom for a week. Maybe it's a bottom for 2 weeks. Whatever. If that's the case, you get this fast squeeze to the upside. Maybe we get a pullback, maybe a bigger move into the middle of October, and we'll play it. That's just my plan, but I want to be patient and wait for these signals to actually show themselves. Okay, that's all I got for you all on today's stock market brief. Hope it helped out. See you on the next one.